So hello guys, once again welcome back. So what you're seeing here is the US 100 index, um, duplicating the Nasdaq 100, Nasdaq stock, Nasdaq futures. Um, you're observing me take this position here, one there, another one there, and another one there. Taking out my first partial there, and just another one there. What am I targeting? These here, these minor, this buy side liquidity at 29,371.8. The levels you're seeing here is the regular trading hours opening range gap. So I have these 15 sell side imbalance buy side inefficiency now being used as an inversion fair value gap to drive price higher. So this is a very good scenario of the Judas swing or the turtle soup. So we observe price delivering lower during the London session there. You can see the time here, 3 a.m. My time is set to New York time. See that there? Better do that. And we also have these delivery to the downside, reacting off these here, this level, the brown rectangle that you're seeing here. So this delivery here is coming for this sell side liquidity, and then taking out the move to eventually deliver higher to this buy side liquidity. So ask yourself, who made the money? And that's what you're gonna target, because this algorithm is engineering the liquidity and then it seeks it, and that's how it delivers. Now these PD arrays give you a chance to engage in this price with calculated losses. Understand that? So I'm also targeting to see whether price is going to reach this consequent encroachment of the regular trading hours opening range gap. My stop is slightly below the consequent encroachment of that. It's a sell side imbalance in the 15 minutes. See this level here, that one there, okay, that level there, being used as an inversion fair value gap to drive price higher. So that's it. That's the end of my presentation. Talk to you next time, guys.